All right. Welcome back to Two Stupid Guys Trade Stocks. I'm Vinny.
I'm Dylan.
And today we're going to be going over my portfolio's current holdings, kind of explain what positions I'm in and why I'm in those positions. Nothing, no dirty jokes there, please, Dylan.
You said it had to be family friendly, right? No,
Yeah.
Okay. All right.
I think innuendo is family friendly, just, no actual graphic stuff. So we are in my main trading account here. I trade with Charles Schwab. As of right now, my account balance is a little bit under $58,000 in total. And I have about $26,000 in cash in that account because, I tend to be more of a value-oriented investor, and I think the market's a little expensive right now. Not to say that cash isn't also working for me. I'll explain how it is still working for me here in a minute. So my largest and oldest position is actually in Apple. I actually have trimmed this position back over the years. I bought Apple back when it was 159 pre-split. So it's been
wow.
Been around for quite a while. Coincidentally, Warren Buffett's a bit of an idol of mine, and within I want to say on the next quarterly filing after I purchased my Apple shares, it was disclosed that Berkshire Hathaway had started a large position in Apple as well. My kind of thought process for getting into this position at that time was that the current media sentiment was overly negative about the kind of diminishing proportion of their income that they were seeing from the iPhone, right? Like the iPhone was like, oh, it was a great product, but like it's not really growing anymore, and it's like more than half of their revenue. It's like, where are they going to go from here?
Which didn't make sense, right? Because they changed the whole model like every 3 years, and it was in the third year of the older model.
Yeah, but
like the iPhone 12 is now like the new version that's going to last them.
Exactly. I want to say that I can't remember the exact number, but there's over 1 billion smartphones in circulation on the planet now. I'm not really sure what the total addressable market is going forward from here, but there's still certainly some room for growth. And then, the iPhones themselves, they seem to have about a 2 to 3 year shelf life, at least in my opinion, useful life, I should say. So you can kind of anticipate a 2 to 3 year cycle of upgrades.
Yep.
And now that we're in the Apple 12 kind of era, we're seeing the 5G kind of cycle upgrade. Which is big, right? It's still more than half of Apple's revenue. But what I think was really greatly discounted at the time was the whole Apple ecosystem. I am not truly like an Apple fanboy to a large degree, but I do own several Apple products, mainly iPad, iPhone, and Apple TV. And the integration is seamless. It is.
You have an Apple TV?
I do. Do you not actually, Dylan? No, but you have an iPhone, right?
Well, yeah. That's actually, it's funny that you said that they last 2 or 3 years because I went from an iPhone 5 to an 8 to a 12. So.
Yeah, that's reasonable. You're stretching it. You're kind of a frugal guy, I suppose. But that's about right. The Apple TV is interesting. I want to say the 4K model right now is $199, and you can stream Netflix through it and HBO Go. Those are Disney Plus. Those are all the streaming services which I use. But you're actually able to control it from your phone, which is kind of cool. And the setup is pretty much nothing. If they're both signed into the same iTunes account, you don't actually have to pair them, so to speak. So when I can't find my Apple TV remote, I can just use my iPhone, which is awesome. And entering passwords is so much easier using your phone and just texting it directly into the application there. So I think it's that level of seamless integration which Apple really brings to the table, which I think will add considerable value in the future. We're starting to get a little bit of inklings about this Apple Car, and although that's what's that?
The chip too. It's the chip's gonna be a big deal.
Yeah.
The chip's gonna be a huge deal.
I agree. It's hard to say on a brute force computing power wise how much power how much of a change it really will have. It is pretty dramatic. From what I've seen, the battery life is just 30% longer than the competitors. It's absolutely insane with the M1 and the new Apple laptop. They're supposed to be coming out
Yeah.
with a 15-inch model, I think, this summer as well.
Yeah. Well, it's not only that. It's when you start producing like your own shit. That the M1 that's going to be coming. When is it coming out? I don't remember.
The M1's already out, but it's only available, I think I want to say, in the 13-inch.
So it's a very specific product, right?
Yes, exactly. Yeah.
Right.
And
so as soon as that becomes like mass market, you were spending money on outsourcing these products for chips. Now they're going to be in-house, so your margins are going to be ridiculous.
well, they're not actually in-house. They're made by the Taiwan Semiconductor.
Doesn't Apple design them?
Apple designs them, yes.
Yeah, that's what I mean.
And Apple invested considerably in Taiwan Semiconductors to basically acquire all of their 5-nanometer wafers for the foreseeable future. Basically, this is a 5-nanometer kind of architecture chip compared to Intel is still on 14. And what is AMD on right now, Dylan? Do you know 7? I think.
I think that they're developing 5. I can look it up though.
I believe that they are indeed developing 5, but I think that they're on the latest generation Ryzen is on a 7-nanometer process.
They beat Intel to 7.
Yeah. Intel is still making their own in-house 14s. Like,
yeah, which is an entire different conversation. I don't know how AMD with their budget beat Intel. That makes zero sense. Killed them though.
They also outsource their chip manufacturing to Taiwan Semiconductors. It's the same company. But I think we're going to continue to see that, and then I am interested to see what the Apple car kind of plays out. Like, you're now talking about a total addressable market of $10 trillion. So if Apple were to capture 2% of the worldwide auto market, it would equal the iPhone to revenue. I mean, there's a lot of things that remain to be unseen, like, what sort of price point this would be. I mean, it's an Apple product, so I expect it to be at a, premium price point. So 2% might be a little bit of aggressive, but the integration, I can only imagine, that they're working on it, where your car will basically, wake you up and drive you to your appointment.
Yeah, that's gonna be wild.
Yeah, exactly. I can't wait to see what it holds.
AMD's roadmap from 2017 to 2022, they're going to have their Zen 4 5-nanometer chip by that time introducing. So
nice.
There you go. 1 year.
Yeah. So yeah, I still love Apple. That's pretty much the kind of punchline of that story there.
Yeah, you have over half your holding in one stock. Isn't that against Buffett's rules?
No, actually.
It's not? Oh, damn it.
People are funny about like diversification, where they have this thought process that like, oh, you should be more diversified. It's like, why would I want to own pieces of the top 20 companies that I'm like, I kind of like, as opposed to owning larger chunks of the top 5 companies that I really like?
Oh, I completely agree with you. You're talking to the guy who just made money on $30,000 of Carnival Cruise Line. So
yeah,
and they're not even cruising right now.
I know. That's interesting. I have a little Carnival play in here as well. We'll talk about in a second. So my second holding down there is Axum Therapeutics. This is a biotech company. They have a couple of drugs in the pipeline. Their kind of major product, I can't remember the abbreviation, but basically it's a treatment for medication-resistant major depressive disorder, which is a phenomenally large drug market, one of the largest in the world. So it has blockbuster drug potential. They are submitting for FDA approval, anticipated in the first quarter of this year. So this is kind of a play on that. I have had the position for a while. As you can kind of see, I am down almost like 30% on this position, but it was relatively small for my account size, and I'm okay with holding it and pending the outcome of the FDA approval process.
Yeah, I'm finding that out right now. Well, so that's one of the things with biotechs, which is why I'm scared. We're making this video on February 6th. Sava, which just went insane. They went from like what? It was like $20 to $150. They're back down to 50. But theirs is all an Alzheimer's drug. Yeah. That, to be fair, had unbelievable results. I'm not saying that not worth it. But it is a terrifying sector.
Yes, I agree. Actually, the second product for Axum Therapeutics is an Alzheimer's drug as well.
Perfect. Oh, really?
Yeah, it is actually. That's their two major products in the pipeline.
Was it Kramer who said the first person who can create an Alzheimer's drug that actually is like better than what we have right now will be like a $40 billion market cap company.
I mean, that sounds reasonable.
Yeah, he said it's going to be insane because the problem with we don't exactly know what caused the theory is that the beta amyloid proteins, but there's been like 6 drugs who have now failed phase 4 and they're going off of that thesis.
Yeah,
and it's kind of a problem. But Saba's results were ridiculous. So.
Yeah, it's certainly interesting.
They were really good.
A terrible disease, and in terms of
it's horrible.
Which one ultimately kind of hits the mark will be interesting to see. It's funny, like this. I'm looking at this position right now. It makes me think of this fact that, like, the average millennial that buys lottery tickets spends about $976 a year. So for $976, you might as well just put that into a biotech company. And
you could
probably has a higher percentage of paying off than the Powerball does.
Yeah, I'm going to say it definitely does. It's stressful, but yeah, that would work.
Yeah, exactly.
You could do really anything with that money would be better than lottery tickets.
True. All right, my friend. So we'll move on in here. So my next position, Bank of America. Bank of America is the second largest bank in the world by deposits. They're still, I think, PE, I want to say, is like 9. It's absolutely insane how cheap the entire banking sector is right now. So I've had this position for a while. As you can kind of see, I am down a little bit on it. That's okay with me. I actually have it set up for dividend reinvestment. So the longer it's down, the more shares of Bank of America I will ultimately own. The fact that, I'm sorry?
Forward PE is 11, pretty low. Current PE is 17.
Yeah.
That's pretty low. Well, yeah. Forward PE, you go forward.
Yeah, exactly. I mean, compared to Apple's forward PE right now is what, 35, 38, somewhere in that ballpark?
Check it.
Yeah.
30.
30. Yeah, that's absolutely insane still. Historical S&P 500 average for PE ratios is 25. Basically, so the anything below 20, certainly in this current market, I think is a solid value. A lot of that discount has kind of been built into the fact that people kind of lost their trust in the banks from 2008, and they still haven't quite gained it back.
I agree. I got some banks in mind as well.
Interestingly enough, I saw this week on CNBC that the XLF, the financial ETF, finally hit the same level it had its pre-2008 high, so it's finally back to the where it was,
13
years ago. So they're long overdue for this, in this current kind of environment we're seeing where the federal government is printing money left and right. There's at least in my opinion, a likelihood of future interest rate hikes as we start to see inflation take hold a little bit. I am no economist, though, but by simple supply and demand, it makes sense to me. So I am happy to own some banks.
You will not hear me say this often, but that is a solid long-term play, Vinny.
Well, I thank you, Dylan. I appreciate your vote of confidence there.
Shouldn't mean much. I don't do much long term.
Yeah, I know. I understand. Patience, man. This is one where I've been patient. You can see I'm down $400 on this position, but that's okay. Like I said, I think I want to say I have at least 7 shares or so in dividend reinvestment program here alone. If you guys are not familiar with that dividend reinvestment program, is where when the dividends are paid, it automatically buys you more stock in that same company at the current market price.
We're gonna do a whole video on basics, for instance, like what dividends are. So if any of that's over your head, we're gonna cover all that. Same with options. He's coming up on options here. We'll do a whole video on it. It can be quite complicated.
Exactly. Yeah, we'll explain a little bit more. So my next position here is Berkshire Hathaway. That is Warren Buffett's company. It only makes sense that being a fan of Warren Buffett,
a little bit of a fanboy,
own a little bit of it. Here's a little random fact about Berkshire Hathaway. They own Geico Insurance Company, and
I did not know that.
that happens to be my car insurance provider. So by being a Berkshire Hathaway shareholder, I actually get myself a discount on my car insurance.
Wait, is it hefty?
I'd have to look at it to actually tell you what it is.
Yeah, tell me. I'll change. I'll buy one share.
Yeah, it was pretty funny. I had to send them a screenshot of my portfolio to prove that I was a shareholder of it. But yeah, I mean, I'm not sure if it was 5% or whatever, but
stay tuned for next video when we find out what the percentage is, because that might change.
Yeah, exactly. Whatever. Yeah. Also, he owns a multitude of other companies. And some of them are really fantastic businesses. If you really break it down on a unit by unit valuation, I think the Berkshire Hathaway is trading at about 30% discount from where it should be at this point in time. Still a relatively undervalued company.
Doesn't he own 10% of Coca-Cola?
I'm not sure what percentage of the company it actually is. He does own 10% of Bank of America, so it's kind of ironic there. One of the random facts I remember learning about Warren Buffett and Coca-Cola was that he bought into them in, I think, 1986. Put $1 billion into them. Okay, 10%, yes.
10%.
He bought them when they came out with New Coke, so it was kind of a distressed asset price at that time, and he took advantage of the opportunity, put $1 billion into Coca-Cola, and that $1 billion that he invested in 1986 now pays him more than $600 million a year in annual dividends alone.
That's disgusting.
Yeah, absolutely insane. Coca-Cola, I want to say the numbers are just actually mind-blowing, in terms of the number of servings consumed every day on Earth. And I don't really trust people that are Pepsi fans, but Pepsi is a good company too. Yeah. Coca-Cola is the better drink. Pepsi is a good company though.
Can you hear me typing? I'm looking stuff up as you're doing this.
No, not really. That's fine.
All right, cool. It looks like you can get up to an 8% discount on car insurance, depending.
Oh, okay. Good to know.
Yeah.
See, there you go. You can invest.
That's 3 years old. I don't know. I'm trying to find it.
It sounds about what I thought it was. I thought it was somewhere 5%-ish, 5 to 10% maybe, but I thought it was closer to 5.
Up to 8, depending on which class stock.
Oh, good to know. Elitists and their Class A stock. So there's another advantage, right? You can pick up a little Berkshire Hathaway, which is arguably, I'd say, about 30% or so undervalued at this point in time. And you can also get a little discount on your car insurance, give you more money to invest in the market.
I'm going to do that, actually. I'm 100% do that.
Yeah, it's a solid plan. So my next kind of item here is Carnival Cruise Line. I don't actually own any shares of it directly in this account at this time. However, as I was talking about earlier, I do have a fair cash position in this account, and I want to use that to earn some income. So I've been selling something called cash secured puts against Carnival Cruise Line right now. The quick and dirty is basically a put contract. It gives the buyer of that contract the right to sell me their shares at $18 per share on or before a certain date. I've been selling contracts on this now that would have my cost basis. So if I were to buy Carnival being exercised on one of these at about $15 a share, if I were to actually annualize the returns out that I'm generating by selling these cash secured puts right now, I think it comes out to a 67% return, which is utterly insane.
Just for the layman, 67% is very good. We're gonna do a whole video on what puts are.
Yeah, exactly.
Dude, it can be. If you read about them, it's really odd, but we'll explain it pretty.
Yeah.
Simple, so.
I'm basically, I consider myself an insurance salesman when I sell puts or calls. I'm selling someone insurance, and I earn a premium for doing that. So move on. Citigroup, another banking play there. Same thing. I think the entire sector is undervalued. Citigroup is trading under the book value at this point in time. I want to say the book value is closer to $80 a share. The decent discount, good exposure to international banking. Obviously, American markets still have plenty of opportunity for growth. There are a lot of underbanked folks in the United States still, unfortunately, but internationally, it's even more profound. And Citigroup is just instituted a new CEO. The CEO was formerly ran their Latin American division. So it kind of shows you the importance of these global financial markets to Citigroup. Another dividend paying relative value bank, I think. So that's why I'm in that position there. Palantir Technologies. This is a Wall Street Bets meme stock of late.
That as well.
Yeah, you do actually own
Wall
some
Street
directly?
Bets. Yeah, I've swung it 3 times.
Oh, nice.
I'm in a current position right now.
Okay. Yeah. So I actually have not actually purchased any shares of it, but I did sell a cash secured put against some shares at $25 a share back when it was trading around $28 a share. It's had a little move up since then. So I am pretty far in profit on that particular trade right there, but it's such a high volatility stock that I'm okay with. I'm going to hold this one till expiration, and then I'll probably reinstitute the same play at the same strike price, because I'm happy to buy some at a reasonable price and hold it for a few years. Their main business line is a data aggregation software platform in which they sell.
Which I don't know what that is, but I'm invested in it too.
Yeah. I think the basic idea is that it helps bring information into a single platform, which allows kind of easier access to and interpretation of that information. So people can, kind of make better assessments about, different, strategies, I want to say, going forward based on the data that they have. Think of it as, almost like a search engine, like a little bit of a Google that will aggregate everything and put it into like a format that's a little easier to interpret and understand. The long-term growth potential, I think, is very solid. Their vast majority of their business has actually been government agencies over the last, I want to say they're actually an older company than you would think. I think 13 years, 2007 or so is when they started.
They just went public.
Yeah. Just this year, exactly. Well, 2020. But they're starting to move more and more into the private sector as well, because a lot of large corporations are saying that they need this data aggregation software in order to operate their businesses more efficiently as well. So
they went public September 30th, 2020.
Yeah. So my next position here is Simon Property Group. Of course, during the coronavirus pandemic, they were severely kind of impacted, I would say, although they remained profitable throughout it. Their, I think, lowest rent collection rate was around 87%. They were still collecting the vast majority of the rents throughout the entirety of the COVID-19 pandemic. And they have a solid dividend. They own a lot of what they call Class A malls, meaning malls that have actually kind of been beneficiaries of the recent elimination of many smaller suburban malls. These are the nicer kind of malls in more wealthy areas. So they've actually continued to grow, and I think Simon Property Group will see a great benefit from that. This still is down about 30% from their pre-pandemic stock price. So I think it's still a reasonable value here as long as you're willing to wait a couple of years for it to come to fruition. The dividend here is pretty solid. I forget exactly what the current rate is.
I can look it up.
Yeah, it's all good. I can take a look as well. 5.3% is what I'm saying.
That's pretty
good. Yeah, it's pretty solid. It's a REIT. So REITs are kind of taxed a little bit differently. But if you own are using a retirement account, it's a great account to hold some real estate investment trust within. All right, and then here's another Wall Street Bets meme stock for you. Virgin Galactic.
Working.
Yeah,
it's proud of you for doing it.
Yeah, exactly. I bought into this at about $26 a share.
Thank you for taking some risk.
Yeah, so as you can see, I'm up a little bit on it. I am personally a bit of a science and space kind of geek, so I figured this was right up my alley there. I'm not really sure about their long-term financial impacts, but I bought them right after they had a rocket test fail, and then I knew that there was going to be an opportunity that their engineers would get it right, and that they would have a successful missions at some point in their future. They did announce this week that they are having another test before February 13th is their guidelines right now. That's why the stock has kind of moved up considerably here, but we'll see. I wish them a successful test, and I wish the stock all access to the moon that it can gain.
Access to the moon that it can gain. Look at that 1.87% account risk right there.
I know, right? Like, yeah, exactly. See, it's funny. So Dylan and I are filming this right after the whole week where the GameStop phenomena occurred, and it was interesting to watch from the sidelines. There was certainly some.
I didn't do it either.
Yeah. If it was too risky for Dylan, it was certainly too risky for Vinny.
Yeah, that's a general rule he lives by. If I won't touch it, he's definitely not going to touch it. Yeah, I didn't touch AMC either.
No, AMC was actually kind of interested, but when I'm not sure about the position, I am willing to usually put like 1% or so of my portfolio into it, as you've seen with that previous biotech and also with space. It is fine to take some of these smaller opportunities, but it's smaller risks, I should say, calculated risks, but I try to avoid them being too large a portion of my portfolio, if you will.
And I do the opposite.
Yeah. So that's it. Well, thank you guys for listening to me ramble on about my current positions, and join us in our next episode where Dylan's going to walk us through his portfolio. And then,
one sec. If you're watching this and you're like, man, do I need to know that much about a company to invest? You don't. That's the fundamentalist in Vinny. He's very, very well educated in the stocks that he's in. In mine, you're going to see, I don't even know what some of the companies are. I purely am a technical analyst. I don't care if they're, CEO gives to charity. I don't know, whatever it is. So it's very interesting because Vinny is very, very well thought out, calculated. He's looking at, he knows more about Apple than I have their phone. I don't really know anything else. He knows way more about his stocks than I do. I purely look at analyst levels and then I come up with my own. And these are all safe. I would feel relatively comfortable leaving my stocks in there for a year. I don't know about PLTR.
Yeah, I mean,
I probably would.
I am at a 20% reduction in cost from the current share price. So it would have to come down for me to get exercised. And I think that option only has about 2 weeks left till expiration.
There you go. Perfect.
Yeah, I think if I can own PLTR for 25 or under, I'm happy to do that until they become profitable, which is I think will be coming in this year. But yeah,
that's a lot of patience.
Yeah, it's a long game I'm in here, man.
All right. My video is going to be a lot shorter because I don't know that much about the companies. So.
Yeah. Well, thank you, and thanks for tuning in. And Dylan, I also want to let you know we're going to actually be starting, I think, the week of February 14th. Is that your plan, Dylan?
Yeah, February 14th.
Yeah, we're going to actually start having some weekly stock picks for you. Things that we're both looking at, and Dylan will have some technicals that he would consider initiating a trade based upon.
Yeah, and we're gonna do a video on specifically how to do it, because it's not realistic to be looking at the stock all day when you're trading. Everyone has jobs, right? So all the stocks that I pick, we enter in something called a stop loss. But we'll explain what that is. It just makes it a lot safer because we both are in the medical field. We have jobs, so.
Yeah, exactly. All right, guys. Well, thank you. Remember to like, comment, and subscribe if you want to hear more, and we'll see you guys soon.
Have a good one.